4 stocks I don't own, but want to. So let's mix things up here today, guys. I make a lot of videos on stocks that I'm watching, stocks that I'm buying, my portfolio, but what are some stocks that I actually love, but don't own any shares or position in right now? So again, remember, if you like this content, hit the subscribe button down below and drop a huge like on this video. Let's go for 50 likes on this video. Anyways, getting right into it, these 4 companies are very large companies. I'm sure you've heard of all 4 of them. And they are companies that I do want to add to my portfolio at some point, but for some reason or another, I don't have them as a position right now. So the first company on this list is Microsoft. So Microsoft, of course, is a massive company, been around for a very long time. And I actually saw some really interesting news recently that they actually surpassed Alphabet or Google to be the 3rd most valuable company now in the world. So of course, they're only behind Apple and Amazon. And the race to a $1 trillion market cap is heating up. So like I said, Microsoft's actually been a company that I've been watching for quite a while, but it hasn't really presented me with a great opportunity to go and pick up shares in the company. If you take a look at Microsoft's business, specifically their cloud business, they're growing this at incredible rates, and it's a reason why I really want to get into this stock. And if that isn't enough convincing for you, they also pay out a stable dividend, so that's another bonus to hold the stock in your portfolio. But anyways, if we take a look at the charts here, we'll get a better understanding of why I don't hold this stock right now. So the first thing I notice when I look at the charts here is just look at that run up that it's had. I love using technicals to help me pick good entry points in a stock, and I love buying stocks that dip to their lower trend support or even their 200-day moving average as long as their fundamentals stay strong. Microsoft looks overstretched to me in my opinion and hasn't really tested that 200-day moving average in over a year. So we've seen a lot of other tech stocks take a hit in the last few months, Google and Facebook namely, but we haven't seen that same sort of reaction here in Microsoft. So Microsoft actually held up really well here in this market volatility we've been experiencing, but as an investor who wants to get in, it's still too expensive for me. I'd like to personally pick this company up at around $85 per share as long as the fundamentals remain intact. So if we do get down to that point, I may add a position of Microsoft in my portfolio. Okay, so now let's jump to number 2, which I'm sure is going to be a very controversial pick, and this is Tesla. So do you believe that electric cars are the future? Well, I do to a certain extent. Do you believe that self-driving cars are the future? In that sense, I have no doubt that self-driving cars are the future. So self-driving cars and electric cars are both segments that Tesla's really taken over in the auto space. On top of that, they have a very strong brand, they have a strong fan base, and their cars sell out quicker than their P100D can go from 0 to 60. If you didn't get that reference, it just means that it sells out really fast. But the question remains, why have I not taken a position in Tesla? So once again, let's take a look at Tesla's charts. And over here we can see that Tesla is a very, very volatile stock. So over the last 3 years, it's more or less been flat and has underperformed the market severely. What I'm waiting for in this stock is a nice dip to around $240 or so, and I think we'll get there soon if we keep up at this current rate. So the stock has actually dipped significantly from its high of almost $400, but it's still very overvalued in my opinion. It's a lot of hype behind the stock, which is what keeps it at a pretty high valuation. $240 is a decent value for the stock. It's still expensive, but the part that I like about this price is that this is where it has a long-term support. And if we do come down here, I expect a pretty significant bounce in the stock. So once again, if we do come down to this price, I would seriously consider picking up Tesla. Maybe not a large position, but definitely a position to have in my portfolio for the long term. Alright, moving right along, we have our third company, which is Visa. So Visa is actually a company that I swing trade pretty often in my options portfolio. It's such a stable stock, and every time it goes down maybe 1% or 2%, it recovers pretty quick and recovers to new highs. But therein kind of lies the problem with Visa. Every time we have a dip in the stock, it just bounces back to a new high and doesn't really provide you that value to get into the stock. So if we take a look at Visa's charts, we can see here that Visa is actually pushing new all-time highs almost every single week. So there were a handful of opportunities in the last year to grab shares, But at the time that this happened, I did not have any free capital to pick up any shares in Visa. But that being said, what worries me about Visa right now is that it is getting a bit overstretched, and it hasn't come down to test its 200-day moving average in a long time. In fact, even its competitor, MasterCard, has been performing very strongly. But with all this competition in this space from companies like Square and Shopify, I feel that the stock will take a hit soon and will come back down to earth eventually. $115 or so would be an excellent buying point for Visa in my opinion, and is most likely where I would pick up a position in this company. But at its current price right now, at about $130 plus, I'm gonna pass. This is a very interesting space overall, and competition's really heating up like I mentioned, so it'll be interesting to see if Visa does take a hit over the next year. I'm suspecting that both Visa and MasterCard will take a hit soon, especially as online buying and companies like PayPal, Square, and all these other companies pick up even more steam. But that's just speculation on my part, and I won't be taking a position in Visa until I do see that significant dip. Alright, so now before we get into our fourth and final pick, make sure to join our new Facebook group at Positive Investing on Facebook, and join our new Instagram account as well, that's positive_investing. Here you can discuss stuff with other fellow investors, myself included, and we can have some great discussions going. So hop on over, join the community, and support the channel. But anyways, getting into my fourth and final pick here, we have McDonald's. McDonald's is honestly a company that I love. I'm loving it. It's a strong brand, it has a strong model, and it's just a company that everyone knows about and everyone actually uses at some point in their life. In fact, there are phases that people go through where they just need that Big Mac. And to have a brand and to have a product that people just crave and need, I think it's a very, very good thing to have in a company. McDonald's also pays a fantastic dividend, and they keep raising their dividend year over year. So again, another strong reason to own this company. But that of course raises the question, why don't I have a position in McDonald's yet? So honestly, it's at a pretty decent buy point. Not exactly where I want it to be, but pretty close. So it has taken a huge hit over the last few months, and it hasn't recovered completely from that either. I really wanted to dip even lower in the short term, but I'm not sure if that's actually going to happen because there's still a lot of buyers out there looking to pick up this company. If we take a look at McDonald's charts here, we can see that it's a high flyer, or rather was a high flyer in 2017, but it took a big hit earlier this year. That being said, when it came down to around $150 or so, that was really my chance to get into the stock, but again, I did not have any capital free. So I learned a very valuable lesson here, because this really taught me that I should always have some cash on hand in my portfolio, and ever since then I've actually been having a good chunk of my portfolio in cash. Now of course I still have a majority of my portfolio in companies, but I still have a nice amount of cash sitting on the sidelines for whenever we have a dip in a company that I'm watching. But anyways, that being said, I'd love for McDonald's to come back to $150 or even lower to fill that massive gap that it has there on the chart. If we do get a gap fill, you can almost bet that I'd be a shareholder in McDonald's for the long term. But again, at current prices, I'm gonna pass on this company. I think we will see some downside in the short term. Again, that's wishful thinking possibly, but I'm just gonna keep holding on and just keep waiting for that opportunity. Make sure to hit that subscribe button down below, guys. Make sure to drop a big like on this video to get 50 likes. But either way, don't forget to invest positively, and I'll see you in the next one.